Hello and welcome. This is Business Incorporated coming to you live from Lagos, Nigeria. Thank you for joining us. I'm Chimezi Obi Iwago. On the program today, Nigeria's May inflation down to 16.25% from 17.28% in April. A Eurobond that Ivory Coast launched this month raises $1.25 billion in 16-year debt and €625 million in 8-year paper. Plus, South Africa raises the threshold of black ownership mining companies must meet to 30% from 26%. Let's get started now with the markets. Of course, basically, the Nigerian inflation figure, which was released today by the National Bureau of Statistics, which came in lower to 16.25%, down from 17.28% in April. Analysts at Financial Derivatives had forecast a sharp drop on the inflation to 16.1%. Data released today by the National Bureau of Statistics shows that on a month-on-month basis, the headline index increased by 1.88% in May 2017, 0.28% points higher than the rate of 1.60% recorded in April 2017, indicating the existence of persistent pressure on prices despite the general decline in year-on-year inflation. Food inflation increased by 19.27% year-on-year in May, down by 0.03% points from the rate recorded in April of 19.30%, indicating continued pressure on food prices. The rise in the food index, according to the NBS, was caused by increases in prices of meat, bread and cereals, fish, potatoes, milk, cheese and eggs, as well as vegetables such as tomatoes. And to the markets now. Stocks in South Africa were trading low at intraday after the U.S. Fed raised its interest rates. The JSE Securities Exchange Top 40 Futures Index was down 0.96%. That's at intraday. The Nigerian market was in the green, up 1.03%. The EGX 30 index in Egypt was down 0.09%, while the Nairobi stock market was down 0.58%. That's on Wednesday. And in the Middle East, a tumble in crude oil prices to November lows, but put pressure on Gulf stock markets today, while banking shares reacted little to interest rate hikes in the region following the U.S. Federal Reserve's move overnight. At intraday, the market was looking mixed. The Saudi Central Bank responded to the U.S. Federal Reserve's 25 basis point rate hike by lifting its reverse repo rate, at which commercial banks deposit money with the central bank, by the same amount to 1.25%, but keeping its repo rate used to lend money to banks unchanged at 2%. This is expected to be net positive for Saudi banks' margins, but shares of other lenders were mostly lower on Thursday because the move had largely been priced in. Saudi index, looking at that number there, was down 0.03%. That's the figure as at 12 noon Nigerian time. In Abu Dhabi, mid-sized banks were the main laggards despite the United Arab Emirates Central Bank's rate hike. The index was down 0.75%. In Dubai, the Dubai Islamic Bank lost 0.5%. Emma Properties fell 0.6% to 7.85 dirhams after profit taken from a rally this month triggered by its plan to spin off its local real estate unit. However, at intraday, the Dubai index edged up 0.25%. Banks in Qatar, which have been beaten down by the sanctions imposed on Doha by 4 Arab states last week, were mixed. Large cap Islamic lender Masraf Al Rayan was up 0.4%, but Qatar Islamic Bank fell 1.2%. The index was up 0.30%. And investors in Europe are digesting comments from the U.S. Federal Reserve and the Bank of England. The Swiss National Bank left its rate unchanged also today. And let's get a sense of what is driving the markets on this day. Let's talk to Ulrich Bartz, my colleague in Frankfurt. Hello, Ulrich. Now, the U.S. Federal Reserve decided to raise rates by a quarter point yesterday. What is the market's reactions to that? Put this side by side with the no change decision by the BoE.
Yeah, the market reaction here is basically one of we expected that. Still, it's not a shock, but share prices are going down here in Frankfurt, for example, and in other European markets as well. Why? Traders tell me that this is because of Donald Trump. On the one hand, there are, according to reports, going to be an investigation into his involvement in the so-called Russian affair, and people fear that if Donald Trump gets involved in such a case, then he might be less able to push through important economic and financial reforms which these markets were looking forward to, and on which much of the share price gains in the past months are based on. Another reason the trader told me why the German shares are dropping here, because it's because of a record high yesterday, and an event like an expected interest rate hike in the United States taking place often initializes some profit-taking. The Bank of England also made an interest rate decision today. It's not that long ago, and it decided to leave its key rate at 0.25%, a historic low, a level that it has had since the middle of 2016. And people doubt whether the Bank of England is going to move anytime soon in the next weeks or months at a next meeting because of the risks of the Brexit negotiations.
Well, aside from those details you've just reeled out that is pushing the DAX down now, let's look at the oil market. That market is heading south steadily, with benchmarks posting nearly 4-day losses. Is the Qatar diplomatic row yet a factor, or some other news upsetting oil traders and investors?
What I'm hearing is it's not the Qatar situation, although that, of course, could play into it at some later time. There are two factors which I'm hearing about. One, U.S. stockpiles, yes, they did decrease, but not in the same margin that people expected. So there wasn't that kind of demand for oil in this huge market. One reason. The second reason, the International Energy Agency put out a warning. Global output will increase faster in the next little while than global demand, and that, of course, speaks for lower oil prices.
How the Eurozone finance ministers are also gathering in Luxembourg today to discuss debt relief for Greece. Any hope for Greece this time?
I don't think so. The German finance minister, at least, is against that, Wolfgang Schäuble. He's been adamant on this in the past months. The Greeks and the International Monetary Fund, Christine Lagarde, the director there, have come with this demand again and again. And Schäuble has said, no, let's put the reform program through first that the Greeks agreed to in order to get the aid that they're getting, just in order to be able to pay back debt that they have to meet. And before the September election, the federal one here in Germany, it's not to be expected that Wolfgang Schäuble is going to move on this. He can't really without losing face in the eyes of the voters here in Germany.
All right, thank you very much, Ulrich. It's actually a rainy day today here in Lagos. I don't know what it looks like there in Frankfurt, but I hope to see you tomorrow.